we're going to be calculating cost of goods sold. If you have not watched the section on cost of goods manufactured, you may want to look at that. We're going to be using the same data that we used in that segment to continue and carry on to calculate cost of goods sold. Okay? In that segment, we did the cost of goods manufactured, and you need cost of goods manufactured to determine cost of goods sold. So you do have to do that first. And if you're not sure of the data or how to get cost of goods manufactured, please go back and watch that segment. If you're comfortable with that, then we'll just continue and use, again, the same data that I used in that segment, but we're going to look at that data again. So here's the data that we were given. Okay, we've got raw materials inventory, work in process inventory, finished goods inventory, direct labor, indirect labor, raw materials purchased, sales, factory equipment depreciation, office equipment depreciation, sales salaries, factory supervisors' salaries, factory insurance, office insurance, and factory utilities. Again, if you watch that segment, then you should be familiar with these as we've already worked with them. We calculated cost of goods manufactured. Now we're ready to start our income statement and actually put our cost of goods sold on the face of the income statement. We're just going to do a partial income. We don't have all of the data to be able to do a full income statement, but we can at least get to the gross profit figure. So we can go at least to there and stop. So let's go back over to a blank page here and let's start working up a partial income statement. So we start with our heading and we just used XYZ Company. And I apologize for the keystroke noise. I tend to be a heavy typer. This is an income statement, and I'm going to put up here partial just so we know this is not a complete or full income statement. The income statement is for a period of time. This is for the year ended December 31st, 2000XX. Alright. With our income statement, we're going to be starting with our revenue, our sales figure. We are a manufacturing company. We do have sales. Let me center this heading. Alright, so let's go back and look at our data. What was our sales figure? Sales is here. That is $800,000. So let's go ahead and put that into our partial income statement. Move over a bit. 800,000. There we go. Alright, what comes after sales on an income statement? Back to some accounting 1. Hopefully you remember that from 2101. The next thing that you should see is cost of goods sold. The problem that we have is we don't know cost of goods sold explicitly. We're going to have to figure that out. And that's where that cost of goods manufactured comes in. So think about what cost of goods sold is saying. It's the cost of what you made, if we're a manufacturing company, and we are, so that you can compare it to the sales figure to see what kind of a profit you made off of that, your gross profit. So if we make products ourselves, we have finished goods inventory. We have those 3 different types of inventory accounts: raw materials, work in process, and finished goods. So, excuse me, to tell what the cost of what we sold, well, I need to base that off how much finished product did we have. What they told me about finished goods. So we have a beginning balance. So that's how much we had that we had started with. Well, if it's in finished goods inventory, it's an inventory figure. It's something that is on the balance sheet. We own it. We haven't sold it yet if it's still in inventory. So that's what we had waiting to be sold at the beginning of the year. This is our finished goods inventory at the end of the year. So we had 45,000 left over at the end of the year that still had not yet been sold. So again, neither of these are a cost of goods sold figure. To determine that, though, I want to use these. Here's what we started with. We could have sold these. Did we sell them? Well, here's what we started with. We can add in that cost of goods manufactured, because that figure tells me everything that we made and completed and added into finished goods for the period. That's going to tell me how much we could have sold. So let's go back and start kind of building some of this data as we're talking about it. So we know we had finished goods at the beginning of the year. So on January 1, we had $53,000 in beginning finished goods inventory. We added some into that. This is where we need that cost of goods manufactured figure, and that's what we determined previously. So that figure was $444,000. Okay. Again, if you combine these two amounts, finished goods beginning, that's what was left over sitting around maybe in the warehouse waiting to be sold, hadn't been sold yet. Then you made and finished extra products to the tune of $444,000. So this is everything you could have sold. So we call this cost of goods available for sale. That means we could have sold this much. It doesn't necessarily mean we did sell it, so please don't confuse this with cost of goods sold. This is not cost of goods sold. This is cost of goods available for sale. I could have sold this much. Didn't necessarily sell that much, though. So that comes to $497,000. Now, to figure out if we really did sell that or how much of it we did sell, we're going to go back and see if we had any goods that were finished that were left over at the end of the period. Did we have anything still in the warehouse that was totally finished but just wasn't sold? Yes. And we can tell that by looking at ending finished goods inventory. I had $45,000 left over. So it was sitting in the warehouse. It was totally finished, so it wasn't in work in process. But we just hadn't sold it yet. So let's subtract that. Finished goods, December 31, our ending inventory was $45,000. So obviously that can't be included in cost of goods sold, because has it sold yet? No, it's sitting in the warehouse. It's waiting to be sold. It wants to be sold, but it has not yet been sold. So we're going to take the difference of that. The figure that we get is going to be cost of goods sold. That's how much we really did sell. So if we look at that and we do take that difference, we'll bring it all the way over here with our sales figure, and that's $452,000. The difference between these two numbers is our gross profit. And that number in this example, too far, should be $348,000. Format this a little bit for you, put some lines in there. But that is it. Now from here you could go again further if we had enough data and complete a full income statement. But this is about as far as we can go for a partial income. But that is how you would calculate cost of goods sold.